Double-entry bookkeeping was crafted by Italian monk Luca Pacioli in the 15th century as an efficient way to record financial transactions. The principal activity of a business is buying to sell on for a profit. Along the way they incur various overheads, such as stationery for the office, staff wages, or machinery. So let's see how these transactions are actually recorded. We start with the basic T account. In this example, it represents the bank account with a balance of £100. The left-hand side of the T account is known as the debit side and receives value, whereas the right-hand side is known as the credit side and gives value. Let's see this in action. The owner buys £10 of stock. This is money going out, so it gives value and is therefore recorded as a credit. The owner then sells the stock for £20, meaning the bank account receives value and it is recorded as a debit. We're now ready to develop the process into double-entry bookkeeping. In this scenario, we have the stationery account as well as the bank account. £10 worth of stationery is purchased. As the stationery account is receiving £10 of value, it is recorded as a debit. With double-entry bookkeeping, the most important thing to remember is that for every debit there must be a credit and vice versa. Here we have debited the stationery account. This means that somewhere else there must be a credit entry. In this case, it is the bank account. The debit and credit entries have both been made for this transaction, and as you can see, the books balance. However, if there were to be a mistake when recording a transaction, such as both entries being recorded on the debit side, the books would not balance. This serves as a useful error detection tool for the books. Traditionally, double-entry bookkeeping was recorded in large leather-bound ledgers, but increasingly accountants use computerized account packages.